Dear trading friends, Bitcoin is doing exactly what we discussed in the last videos. And once again, it shows how incredibly accurate the Fibonacci retracement and the Fibonacci extension zones are. And that's what we want to go through in this video. We're only looking at this through technical analysis. An incredibly important level that we currently have. If we break through that, I actually see us going lower quite quickly. Of course, we're also looking at the large orders and whale grades, although at the moment there isn't quite as much there as I'm actually used to. No idea if maybe an update or something is needed here, but you can see that either the order book is actually pretty empty and there are no older orders in it. Maybe there are also possible escalations happening in the background. You know what I mean? Then of course we'll take a look at the liquidation heat map. I actually haven't really checked it myself yet, especially on the higher time frames. But in this case we can also see, also if we look a bit at what the Coinglass legend and the level 2 data are showing, we actually see again that there are massive liquidations just below us, down to around 75,700 in that area. But what I noticed, and I found a match here, in this area, remember this price here, about 74,223 US dollars. There is a very, very large hyperliquid liquidation there. So in this case, you can see it. If I quickly turn this on and off, this big red line. There, if I hover over it and zoom in on the hyperliquidation, you can see that 881 Bitcoins with a 20 times leverage are sitting there, which will be liquidated at a price of 74,223 US dollars. And that's just this area. But if I go even further now, and we look at the liquidation map and go exactly to this price. So roughly we're talking about 74,205, about $20 below the hyperliquid whale who has his liquidation there. Here too we have a very, very large one. A 100 times leverage position cluster, in this case with over 175 million US dollars and 100 times leverage, which is only present on Binance. And the total value that would be liquidated in this area is 1.87 billion US dollars, which is why I find this quite interesting. And if we then look at the 90-day period, and this is where it gets really interesting, we see a lot of strong accumulation in a rather narrow price range, all the way down to just under 70,000 US dollars. But there are still 13.34 billion US dollars below us, while above us, if we include the cluster up to a price of 82,000 US dollars, because that's certainly still an interesting cluster, we're at about 7 billion. So that could actually be quite tempting for the institutions for them to say, okay, we just want to liquidate the entire upward trend we've had simply to the downside. What does the situation look like at this point in time? Bitcoin still hasn't done anything different. As I already mentioned in the last video, we have reached our Fibonacci zone up to the 0.786 level. That's why there's also the green box here, and I pointed out the lower green box, which was nothing other than the target zones from this area. And now, if we look at it, we've hit it perfectly. The 1.618, that's one of the most valid levels we can see here. We've targeted and reached it. I might actually need to draw that a bit more precisely, because if I draw it exactly, it fits right back into this box. Now we're in it. Now we've beautifully targeted the box, meaning the 1.618. And at this point in time, at least on the 4-hour basis, we're now finding some support here with several candles. But the 1.618 Fibonacci extension, there's something else here that coincides with it. And why do I say for everyone who's positioned short and thinks, okay, great, it's going to keep dropping and we'll fall even lower? I believe we will fall even lower. But there is something we definitely need to pay attention to, and where we should also be cautious. We still have exactly this Fibonacci level that I talked about, where we've had support several times. So once at the 0.5 before the big rally, that's the Fibonacci retracement, 0.618 was triggered as support for a very long time here. And after that we fell down. And where do we have a confluence now? The 0.786 and the 1.618. But I'll turn off the extension for now, because here you can also see how beautifully the candles are reacting to the 0.786 Fibonacci level. And that's why this could still simply be an uptrend for now. Also, I want to be completely honest again, we did break through a very strong uptrend along this trend line to the downside. Despite everything, you have to be prepared for the possibility that we might get support here again and see another rise. That means I definitely wouldn't go short here now. In the signal group, we're already higher up. Shorts, also all the trading bots are now beautifully in profit with the shorts. But we still have to keep in mind that this could actually serve as support, and we could still see another rise that might take us further up, maybe give us a retest, or, and this seems more likely to me, just target the next Fibonacci level before it can continue downward. And what do I mean by that? For that, I'll turn on my Fibonacci lines, the automated ones from my indicator. And what I mean is we simply have new Fibonacci zones here that are very, very interesting. 79,900, 79,715, and 80,720. Because we have targeted the 0.786 here, we are currently at the 0.786. And if we really see this as a possible trend continuation, if we say, okay, this bearish trend that we've now established, if we continue it, it could actually look something like this, so that we really get a clean bearish price action with lower lows and lower highs. And maybe we'll keep moving further down and see even lower prices. Because why am I not too optimistic yet when it comes to short positions? Exactly, and that's what's important. From this low to this high, if we really break downwards on a daily basis, then the smaller Fibonacci pattern here would also be broken. Because we would have broken below the last low for the current Fibonacci zones. And after that, we would also have a gap. What do I mean by a gap? I'll just quickly turn on the VPV now, and I'll zoom out a bit so you can see it in a moment. So you can see what I mean, and I'll also remove these things here, including this Fibonacci level, so that we have a clear chart again. Now I've got it right. If I include this entire price movement here, we can see, and this is very, very important, that we have a volume support here, actually quite a strong volume support that has built up in this area. We have currently fallen below that. This is exactly the area where we are now facing resistance again. That means this volume support, which has just turned into resistance, could cause us to drop quickly with the lower traded volume, down to prices of 72,500 or even 71,020. But if I zoom out further now, so far, I've only included the price drop and this rise here. Of course, we want to zoom out a bit more because this also becomes very interesting. In this area as well, we have a very, very large volume profile down here. That's also where our point of control is, which you can see by the white line. And now we can see here, I want to zoom in a bit on this. If we now draw a line exactly at the current volume support here, we can see that this area actually acts more as support than resistance when we zoom out further and include this as well. Now the question is, does the broader view we have here count more as support? Or do we look at the smaller view if we exclude the previous volume area? And is that what's playing out so that we've already broken down through the larger volume support here? And in the last video, we also talked again about the EMA and SMA. Now here's the situation. Honestly, I didn't expect that either. That we actually had the EMA here as support. On the 4-hour chart, the 200 EMA and SMA, this is exactly the area that's really interesting to look at. You can see how long and how well it provided support. We had that before we broke downwards and even had another retest. But on the daily chart, it was the case that we had this major rejection up here, where I had already talked about the bearish and Fibonacci levels. And overall, it now looks more like we are actually going to move down. But what do I mean by daily chart? Is that what I mentioned earlier in the video? So more at the beginning where we made these higher highs and higher lows here. And if we include that now, we haven't made a higher high anymore, but the last valid higher low is here. That would, of course, only become really interesting if we actually break downwards, so that we then have a bearish confirmed price action also on the daily chart. That's why I'm still a bit cautious at the moment, but the rejection here is already apparent. It's already been confirmed that now on the daily chart and the 4-hour chart, I actually thought we would squeeze together a bit here with the EMAs and then make a directional decision. But as things look at the moment, it's more like we've now also crossed below the 200 EMA and SMA on the 4-hour chart. If we take a quick look at the liquidation heat map, let's look at 2 weeks, there will probably be quite a bit above us now. But we'll also take a look at the 1-month view. And the 3-month view, I mean here, the 82,000 to 83,000 range is super interesting. We really must not forget, and I always want to point this out, after such an increase, you shouldn't just focus on the liquidations above us, but also think a bit more long term. Because everything we've built up here in terms of liquidations with over a month or 1.5 months of upward movement will of course eventually become interesting for all the institutional players as well. Where do I have that now? Here we have it, and there we can see these areas. Just under 76,000, then 74,300, 74,200, which I also mentioned earlier regarding the hyperliquid wall. Where do we have that now? It's located right here. It's in these price ranges. So these liquidations are very, very interesting to me. 1 month, and then let's also take a look at least let's also look at the 3-month period so we can see what else is below that. And here we can see that things are now spread out. There's quite a bit to the downside, but there's a really large cluster around 62,000, which were these recent lows here. But before it gets to that point, I do think we'll go lower, but before it gets that far, let's take a look at what the next levels are here that could be targeted. And we also need to keep one thing in mind. Bitcoin whale analysis. All the people holding over 10,000 Bitcoins. We can see that they have once again started selling off massively. In this case, there was a small sell-off, but the selling has decreased a bit. But you can now see here in this yellow area that these sell-offs have increased significantly. And at the same time, we also see that the ETFs are currently selling off Bitcoins and Ethereums again. Yesterday, on the 18th May, we saw that $648 million worth of Bitcoin were sold off and nearly $85 million in Ethereum. That's why we should be cautious. Of course, the 100 times Able bot also stays up to date. It's running, it's doing its thing, so it's okay to keep accumulating. This is a DCA bot that he has activated here. It has already diligently accumulated quite a bit. At the current moment, it would be almost 26% profit if it takes its first take profit now. Then we also have the injective from the PIONEX live stream, which is now back in profit as well. Feel free to check it out today at 6 p.m. German time. PIONEX duck on the channel, I'll be live there again. Otherwise, the short bots have now gone well into profit. Only the S&P 500 isn't really cooperating yet, but the rest, the neutral bots, have now built up profits again. So overall, I'm actually very, very satisfied with all the trading bots I currently have running here. Alright, that's it for now. We'll see each other in the next video or today at 6 p.m. on PIONEX. Until then.